Awesome, Andrew. We're live. So we got Andrew Gazdecki from MicroAcquire here on the podcast. Let's Buy Business. Welcome to the show.
Thanks for having me, Ryan, and nice job pronouncing my last name correctly.
Oh yes, one of the few. I hope, right? So Andrew, I followed your journey for a long time. You're the founder and CEO of MicroAcquire. Just barely, I saw on LinkedIn that you posted 200,000 in MRR in 12 months. That's amazing. Well, first off, congratulations.
Thank you. I should say ARR though. It
Oh,
was
sorry.
annual recurring revenue, but I'm still super proud of it. So
Okay, yeah, not MMR. So yes, ARR. I actually had that wrong on my notes. So um, let's jump in. So Andrew, you have such a fascinating background. You've done a lot of different things. We'll jump into MicroAcquire because it's really that. I think that's what's going to hit home for a lot of the listeners here, just in terms of acquisitions. We've talked about a lot of the big brokerage sites. Yours is definitely unique and comes at a really interesting angle. And it's also you've got some really cool hockey stick growth with the amount of listings that are coming on board. But you've got such a cool entrepreneurship background. Walk us through some of your startups, some of your acquisitions, kind of how you got to this point.
yeah, definitely. I'll give you the short version. There's a 2-hour version if you ever have time, but been an entrepreneur my whole life. Essentially, I was the kid selling Pokemon cards. I had a World of Warcraft website that sold digital gold. That's a little embarrassing to admit. eBay store. I remember I met the president of PayPal one time, and I was like, I'm a big fan of PayPal. Like, I've had an account since I was like 15, and he's like, you need to be 18 to have an account. Like, and whatever. And that's just been me. I've always loved to start businesses. I've always loved to, tinker with new ideas, especially technology. So the long story short of my career, started a company called Business Apps in college. That was a do-yourself mobile app builder for small and medium-sized businesses. Built that after seeing a need from a previous company. It was a job board that connected businesses and mobile developers. Sold that because I kept seeing people post the same request. Like, I want this app with these same pieces of functionality or whatever you want to call it. And so I said, hey, if I build a template and make it like really easy for people to configure this, I could probably reduce the price, make it easier to get this in the hands of small businesses. So started that company in college, grew it to a little over 10 million annual recurring revenue, only raised 100,000 for the business. Fun fact on that one too, we literally created more mobile apps than any other company in the world. Some interesting people too. Like Jordan Belfort built an app on the platform. A couple NFL players, Fetty Wap, the rapper. So it was a really fun business, really fun ride. And then after that, company was
Real
acquired.
quick, Andrew, did you get to like hang out with the Wolf of Wall Street and all those guys, or what was kind of was it less so?
No, I totally wish. So the way it would work was we would just see the apps when they were created. So we weren't actually making the apps. We built the software and we put the software in mostly agencies' hands. So agencies would essentially use our software to build apps for their existing customers. So we would just kind of see the apps being published. And so I never got to talk to anyone cool, unfortunately. We made an app for like Billy Ray Cyrus, Miley Cyrus's dad, like some pretty funny ones, but they were mostly like small businesses, restaurants, salons, gyms, that sort of stuff. But sold that business in 2018 to ESW Capital. And then, made the smart decision to start a new company, like literally when I was in due diligence. And that was a blockchain trading company called Altcoin. And what we were building was a framework to essentially speed up transactions on the Ethereum blockchain. Super challenging project, totally out of my element, definitely got me out of my comfort zone. And that was a lot of fun. And that company was acquired by a crypto holding company called BNK the Future. Pretty much a year after I started it. It was more of a build to sell company. I mapped out all the strategic acquirers pretty much before we even started working on the software. Then after that, like we were talking before the recording, took a CRO role at Spiff. And during that time period, I was actually working on MicroAcquire on the side, but I didn't think it was going to work. I built it out of a personal pain. I saw brokers in the market. I saw nothing specific to SaaS. And given that's kind of my passion, I thought, there should be a marketplace where buyers and sellers can connect directly, and built that. And that's kind of what I'm focusing on now. So,
That's awesome. To unpack a few of that things, right? So, business apps, it was a really cool software. It sounds like you had some really cool apps and tools to help people build apps. You probably didn't start it out to like, hey, I'm going to get this to 10 million ARR and sell it, right? How did that process go from, interest? Did someone approach you to want to buy it, or you kind of like, hey, this is all I've done since college. I'm ready to move on to the next thing and build the next thing. Like, how did that start in your mind, or did someone reach out to you, and how'd that conversation go?
yeah, good question. So it was, I mean, every entrepreneur, when you build a tech company, you would love to be acquired, or go public or something like that. So I had brought on an investment bank in 2016. We had multiple offers from strategic buyers. We also created a relationship with the PE firm that acquired the company 2 years later. But I was young. I was like 26 or something like that. So, I wanted to keep going. I wasn't, I had more gas in the tank, I guess you could say. And so, around 2018, the PE firm came knocking again, and the stars kind of aligned. I was a little exhausted in the business. I'd been in it for about 8 years. But it was really just a cold reach out, and I had previously known the firm, and they made a fair offer on the business. Really, all the terms that I had asked for, we worked through, and it was everything I could have wanted. So it was kind of one of those situations of like, right time, right place, and we made that happen. So long story short, it was a cold reach out, but the relationship did take quite the acquisition process from start to finish for that business was, probably 2 years.
Yeah, a lot of people don't realize there's a lot to unpack when you go to sell a company, especially in the software space, or one that's doing 10 million a year in revenue. A lot of those conversations are started years in advance, and you build those relationships, and you can actually build those relationships now, craft them of saying like, hey, what would you look for in an acquisition? And then you go out and build that company that they're looking to acquire with, basically the roadmap they tell you. And I would imagine too, you're 8 years in, and you've been tinkering since you were 16, right? And you have all these ideas that you want to do. At some point, people move on, and they're ready for that next opportunity. And sounds like you just, it probably kind of the stars aligned, and you were ready to be burned out. And, you woke up the next day and then started altcoin. So it didn't take very long to jump on the train again.
Yeah, I mean, when you're in a startup, in my mind, I always say that it's kind of like cat years, or excuse me, dog years. So, a year in a startup is like 7 years in like regular life. So I felt like, I learned so much. I had an amazing ride with the company. It was an experience I'll never forget. And I'm extremely, grateful, to have that opportunity. But yeah, I was ready to move on. I started getting excited about, blockchain technology. I was really excited about B2B SaaS, specifically enterprise SaaS. And really just, I had learned so much over the period of time running business apps that I felt, you know, I could take what I've learned, move on, and start some other interesting business. And that's what I did.
Oh, I love it. That's great. So you started MicroAcquire. Let's jump into that. You got into the acquisition space because you're trying to scratch your own itch. You had talked about selling two different companies and probably a lot of the headaches that you ran into. What made you decide to like, hey, let's jump into this acquisition space? This could be an interesting space to disrupt.
Well, for starters, I just love working with entrepreneurs. I love speaking with, interesting people like yourself. And so I kind of just wrote down all the stuff I didn't want to do in my next company. And it's a great exercise for anyone listening of like businesses that are perfect for you. So for me, I knew I wanted to work with startups. That was like the main thing. And if you look at, kind of the startup ecosystem, the really iconic companies, you have AngelList for investing, you have Product Hunt for discovery, but there's no one really talking about, exits and acquisitions, really with the founder's voice in mind. And that's such an important part of the founder journey that, given I had some prior experience with acquisitions, I felt I kind of had a competitive advantage in terms of, going through that process, not just going through it, but like the emotional roller coaster of, you're selling your baby and all that sort of stuff. So that's what really attracted me to MicroAcquire. And then just, did a quick competitive landscape search of, competition in the market. I saw mostly brokers. Really reminded me of, like a real estate market. And, there's someone in the middle, and any market where you can remove the middleman is always interesting to me. So, yeah, kind of just, looked at what I'm interested in. Landed on startups. I think acquisitions are a very important part of, any founder's journey. And, no one is really, attacking it from, the lens of putting the founder first. So that was kind of this looks interesting, but in full transparency, I had no idea it was going to work. Like it's a marketplace where startups sell their startups to other startups. Like, I made it for fun and I made it look really good. And I literally told this to my wife. I was like, I don't care if anybody uses it, but I'm going to make it look really, really good. So if you look at the design, it's kind of overdone, but
Oh, it's
yeah,
beautiful. It looks like you got a team of 50 developers back there.
not 50. I do have a team, but not that size. No, it's a
Yeah.
marketplace. So it's, low on R&D, and the value in a marketplace is really, the deals and the buyers and connecting those two. So that also went on the list of things I didn't want to do. Like with business apps and with altcoin, it was so heavy in terms of R&D investment and constantly having to innovate to stay competitive. I didn't want to build another business like that. So that's kind of where I landed on a marketplace as well, because with the marketplace, the value isn't in the technology, it's in the brand, it's in the users, it's in,
It's in that connection that people come through.
yeah, just basically like you can buy a script for eBay right now for like $500, but you're not going to go public the next day. eBay's value is, the network effects they've created. So, given that, I mentioned this to you before we started recording. I love marketing. I felt that this was something that I could, market well and have a fun time doing it. So checked all my boxes.
Oh, that's great. I love how you kind of started with the end in mind. And I always recommend that to people. And I've had to do that several times in my own life, is saying like, what are the things I don't want to do? And what are the things I do want to do? And it allows you to have all the opportunities in the world, and you can really narrow down, because a lot of things just aren't going to fit into those. And so it's kind of a way to reduce all the decision fatigue. Like, is every opportunity the right opportunity? Well, there's a million different ways to start a business or grow a business, or even, buy a company, but that doesn't necessarily mean it fits in with what you want to do and your skill sets and what you enjoy. And of course, your ideal lifestyle. So walk us through MicroAcquire. Is it mainly SaaS companies? Do you have other companies listed on there? Walk us through some of the types of listings and kind of who the target market is, the general size of these types of companies.
Yeah, definitely. So it's mainly SaaS, but there's a good amount of e-commerce. I've listed marketplaces, I've listed communities, mobile apps. I've played around with a few like content websites, but it's predominantly SaaS. And so the buyers is the most interesting part. So the buyers is everyone from, founders of public companies to, VP of sales or CROs or CMOs at, other tech companies just looking to own 100% of a business rather than like a tenth of 1% of a business. And then a lot of second time entrepreneurs who maybe have had an exit, and instead of, chewing glass for 2 years to get something off the ground, they'd like to buy something with a little bit of product market fit. But yeah, the goal with MicroAcquire is to build the best marketplace with the highest quality SaaS businesses. But from time to time, I do list interesting tech businesses depending on it. Every listing is manually approved by me. So I look at every single one and I curate it, and I make sure that I gather information from the founder just to make sure it's not like a complete scam or something like that. Don't do like due diligence like a broker would or something like that, but definitely curate the marketplace so it's, high quality. But you'll find a variety of business in there, but I'd say 90% are SaaS.
Yeah, that's fantastic. With what you said, chewing glass is a great way to approach entrepreneurship if you start from scratch. And so I started a lot of companies from scratch, Andrew. Some of them worked out, a lot of them didn't, but I've tried to skip the last few years, skip from starting from scratch in that chewing glass stage. So one of the things that's really important here, and a lot of people don't realize, is there are a lot of marketplaces out there to buy a company that you can list companies on there for sale that don't get verified really well. And the industry is rampant full of, scams, and it's gotten a lot more buttoned up in, say, in the last 2 to 3 years. But the fact that you look at every listing and you're not creating, a 30-page summary like a broker would, but you are verifying certain aspects of this business that it's actually a legitimate business. What I found was interesting too. So you said a lot of like pretty high profile people are the buyers. So from a seller standpoint, the reason they would want to go with you is there's actually no fee. Am I understanding that right? There's no fee to actually sell with you. You actually make money off the buyer subscription, correct?
Yeah, so there's no commissions, there's no fees for founders, so you can list your company literally completely free. I like that because it brings kind of like an unbiased view on the company. Like I'm just listing it, I speak to the founder, I gather information, but I'm not going to argue with them on price. I'll give recommendations, but what they tell me is what they tell me, and after a quick conversation, they go live on MicroAcquire, make the listing look good, gather a P&L if they have that available, and then if they use something like Stripe or ChartMogul or Baremetrics or ProfitWell or Google Analytics, we connect all of that data so that you can get a real snapshot on the business instead of just these are my numbers and quotes and not be able to verify that. So there's some cool tech built into MicroAcquire that helps like actually verify revenue and verify traffic. Yeah, I mean, I think really just making it as easy as possible to list your business is important to founders because, they don't want to spend 3 months, going through this process of getting ready with an investment banker, building out like a prospectus that just basically says the market's growing, everything's amazing. Like I've never seen a prospectus that's like, this market's bad. Like it's growing. It's great. Here's all these amazing opportunities. So it's almost like you have to reverse due diligence, even like a broker's like prospectus. You have to like, okay, what's wrong with this thing? Everything seems so good. So I think it's just like a fresh take, in the marketplace. And I definitely want to note, brokers and bankers have their place 100%. But my goal is really just to bring more optionality to founders, and that's what I'm doing.
Yeah, I think anytime you're getting information from someone, you have to understand and ask yourself, what is their take on this information? And I would say, 90% of brokers aren't very good, but it's the same thing with real estate agents. And it's the same thing with customer support at really any company. Whereas 5 or 10% are really good. But also like any information that they're providing you, and half sometimes of the decks that I see will have like, the market is this big and it's compounding 20% year over year growth and all these things. And I'm like, well, I don't care about any of that stuff. Just show me the company. Right. And so sometimes there's a lot of this fluff that goes into sell it. You give the seller some guidance, but ultimately they can list a company for whatever they would like. What's the overall size range that people can expect on MicroAcquire?
Good question. There's a wide range. So there's different groups. Some people are looking for, a Shopify application that's making like, 2K a month or something like that, all the way up. The biggest company that's been acquired on MicroAcquire, definitely in the 7 figures, it was a little over 2 million. So that's kind of a big range, like anywhere from like 20K to like, I would say probably 50 or 5 million is probably the highest valued company. But I do, if some founders come on there and they have like, let's call it, 100,000 annual recurring revenue, they want to sell for like $30 million or something like that, I won't list that just because it's just, I tell them, I'm like, there's no way, like, I'm sorry. So I do that once in a while, but that's probably the least, fun part of the job. But there's a good range. Like if you're looking for something small, it's on there. If you're looking for something in the middle, definitely on there. And then on the upper range too.
Yeah, you'll definitely run into with your job. You have to tell some people their baby is not as pretty as they think, right?
It's the worst. Like, because it's a good startup, but it's like they're like, why are public companies trading at like 30 times like ARR? And I'm like, well, they're public and they're at scale and like they have like all these things factor into
They're
that.
liquid and they have 10,000 customers all paying
Yeah.
$10,000 a month or something. So what are some of the trends? So you've been in this industry for a long time as a participant. You've seen both sides of the table, which is really important, especially emotionally as you've sold businesses, you've bought businesses. Now you run a marketplace. What are just some of the trends that you're seeing overall, but also like with MicroAcquire and online businesses?
I would say the first thing that comes to mind is probably people rolling up companies with a similar customer. So, micro roll-ups, where a good example would be, I acquired a small invoicing company called Chimcharge and fixed it up a little bit. And, I've seen other people like roll up similar companies towards freelancers because, with the pandemic, so many people are starting to realize that, maybe it's a good time to think about working for yourself. Some people are rolling up Shopify apps. Some people are rolling up, Stripe apps. Some people are rolling up, Slack apps. I think that's a really interesting strategy because every company or product that you acquire, you're able to potentially grow the other product just through cross sells. But that's one trend. And then I would say just a trend in general is just the interest from buyers. As soon as startups go live, so true story on, I released MicroAcquire Premium, which is a premium subscription to access the deals on MicroAcquire and be able to contact sellers. Before I put that into place, when a startup would go live, they'd get like 100+ requests from people. And now I'm kind of getting into a phase where even when you go live with just premium, you still get like so many requests. So I guess what I'm trying to say here is people are becoming more aware that, buying a business is a really profitable path towards entrepreneurship. And in my mind, it kind of de-risks, being an entrepreneur because you're buying something with product market fit. You have a little bit of a spark in terms of, ways to grow the company. So long story short, I think just a trend is just a lot of buyers are coming into the market.
Yeah, it's probably turning into more of a seller's market, and you might see more sellers take advantage of that too, which of course will then fuel the fire both directions. Or if the sellers don't come up to the table, then you might just see multiples actually increase too. Is anybody on your platform doing like walk me through maybe some typical structures? Are people doing loans? Are they doing a big chunk of seller financing? Is it 100% cash? Uh, what are some of the structures that are typically done in MicroAcquire?
So to be transparent, I don't see every deal that closes. The way I find out sometimes is like literally I tweeted this out. I got an email. Some guy said, "Hey, sold my company. What's your address? I want to send you something nice." So I don't know the structure on all the deals because I all I do is just connect the buyers and the sellers. But it's safe to assume that a lot of them are all cash. A lot of them are seller finance where maybe it's half up front, the other half over, 6 months or something like that. So I've heard of different structures, but I don't have like exact numbers just because, I try to respect the privacy of the deals between the buyer and the seller. So it's kind of everything is probably the best way to put it. But I don't have like, 20 deals, 20% of deals are like this, 30% are like this. But I can say on the larger side, typically those ones are all cash.
Yeah, that makes total sense. With kind of with just a minute or two left, what Andrew is like your top tip, one or two tips that you'd give to a new buyer who's kind of interested in the space and they want to take the jump into entrepreneurship, but like you said, it's a little bit safer by buying something that's already got product market fit and profit. What's a top tip or two that you might have for them?
I mean, the first one that comes to mind is start small. Like again, going back to Chimcharge, the simple invoicing product, I bought that just because I liked it. It had, I think like 2 or 3 thousand in annual recurring revenue at the time. It's grown to like 65. But just buying something and understanding, what is an LOI, what's an asset purchase agreement, the transfer of the assets. Are you going to transfer them into a C corp or an LLC? Like getting all those things just kind of right on something small is probably my best advice, because then when you take, a shot at something bigger, you kind of understand what you're getting into, so you don't, you know, completely blow things up on your first acquisition. So a piece of advice number two, I'd say, talk to founders. Like it's always really important for me, at least, to. There's a quote by Warren Buffett that you can't do a good deal with a bad person. So, talk to a founder, understand like why are they selling? What does the ideal outcome for an acquisition look like? See if like this is someone you'd want to do business with, because if you buy their company, you are. So that's my two tips. Start with something small, and when you find something you like, get to know the founder and see if there's a fit.
I love it. Thanks, Andrew. I don't think someone needs to walk out at the gate and go buy a $5 million company. There's definitely, you screw up on the, $20,000 company, right? And then, as you get to that next level, there's an entrepreneur I know who he sold his first company for, 10 or 20 grand. The next company sold for like 100 grand, and then he started having like a mid 6-figure exit, and 10 years down the road, he had a multiple $1 million exit. Right. And it's all about like compounding on itself. And so you don't necessarily need to go for the grand slam at first, but, get a base hit here, a base hit there. And I love that you can't do a deal with a bad person. And a lot of people don't realize when you do a transaction, is it just like, you're not walking over to the store and buying, a hamburger and leaving, or like, buying a pair of shoes and you never talk to them again. There's a big transitional period, and that owner, the seller, will always know the business better than you do. It doesn't matter how long you run it. So they're always going to know the business because they know where the skeletons are in the closets that you don't even know exist. So, Andrew, thank you so much for your time. Where can people find you? Where can they reach out to you? Where can they follow you on the networks of the world?
Yeah. Gazdecki on Twitter. You can shoot me an email, andrew@microacquire.com, or just go to microacquire.com and you might see my face pop up in the live chat, because I'm a company of one right now, handling everything. So happy to help if anyone has questions about SaaS acquisitions.
We'll link to that in the show notes. Andrew, thanks so much for jumping on the show.
Thanks for having me.